Well, hello everyone. Welcome to Short Verticals. My name is Barbara Armstrong. I'm a coach with Charles Schwab and delighted that you are joining me here today. Connie Hill is on a well-deserved vacation. And so I am trying to live a little vicariously through here, but I'm happy to be filling in for her here today. If you are not following us on X, you'll want to do so. Connie Hill CS is her handle, my handle, Barb Armstrong CS. And we've got Brent Moores in the chat. He's a friend and fellow coach and knows a ton about this topic. And along with many others. So you want to be following Brent as well. He's posting a lot of great content, Brent Moores CS. So what are we going to talk about today in the land of short verticals? Well, we're going to be talking about short verticals, and we're going to be talking about trading with a plan. And first of all, having a plan before you trade, and then trading that plan. And this is just, we're going to bring up one example of a plan. We're in the middle of earnings season, and it is a very popular strategy to use over earnings because volatility tends to be high as you approach earnings, and then this volatility crush happens after the earnings announcement. The challenge is that if you're wrong on direction, something can very quickly go from a reasonable gain or a high gain to a max loss. And with short verticals, the gain to loss ratio is often, 2 to 1 or 3 to 1. And so we are going to come up with a plan that avoids trading over earnings. And this is not the I-Chi of trading short verticals, because lots of people use this as an earnings trading strategy, but it is just one way to approach it. And so that's going to be the approach we're taking today. Just before we get started, I want to remind everyone that options carry a high level of risk and aren't suitable for all investors. We're going to talk about those risks in this class today. Everything we cover, because we're going to look at a lot of different stocks, is for general information purposes only and shouldn't be construed as a recommendation. We will be using the Paper Money application on the Thinkorswim desktop platform. And if my platform looks different from yours, you may be on the desktop, or you may be on a different version of the Thinkorswim platform. So we want to keep that in mind. Know that one of the nuances or differences between trading in a live account and a Paper Money platform is that in Paper Money, short options will never be assigned early, and short verticals always contain a short strike. And in a live account, that can happen. So we don't get to see it happen in Paper Money, but we can discuss what we might do should that occur. Okay, or what we can do, to help prevent that occurring coming into earnings. But the net of it is that when we sell a short option, it can be assigned at any time from the time we place the trade until we close it. Okay, so we're going to go over our trading plan today. I think everyone in this class is familiar with short verticals. If you're new to all of this, please let me know and I can give you, a 30-second overview and then point you in the right direction. Because I don't typically teach this class, we won't be doing trade management of previous trades, but I will be filling in for Connie again next week, I think. So we'll review the trades that we did this week, but we're going to focus more on evaluating and placing example trades. Okay, so let's get out to the platform. And let's just start. And if you don't start your morning with Kevin Horner, who does a Trader Talks webcast at the market open at 9:30 Eastern, you may want to start checking that out because he does such a great review. I now do less, but we're seeing the S&P 500. It's still down almost 5%, but from the 20-some% it was down. From the top here on February 19th to the bottom, it's kind of come a long way back. So we've seen this, and yesterday was quite extraordinary because at one point it was down quite a bit and then it rallied pretty dramatically and ended up just slightly at the end of the day. But today we're up a full percent. But this candle pattern might be saying that this, bump to the upside, might be short-lived. And for confirmation on it being short-lived, you'd look for tomorrow's candle to be below the close of today's body. And we don't have that yet. So it could just keep going up to the upside. We won't know until we see it. When we look at our NASDAQ tech heavy index, it too is up like 1.5% today after having a similar, it opened, it gapped down on the open and fell further and then rallied to finish up on the day. And today, a nice bounce to the upside. And this at one point was down 23%, still down 6% year to date, but we'll take it. The bulls are smiling today. Riceberg is saying, to Josh that he has now graduated and officially has his badge as a usual suspect, which is the name that I tend to give those that come all the time. So hi to Riceberg and Josh, and congratulations on your promotion to a usual suspect and to Life in the Fast Lane, and Will and Chris and David and Nihad and Scott and the rest of you are who help bring this to life by being so participatory in the chat. Now, when we come and look at the VIX, it is down today, but at 24, like if I take this line and we move it down to the 24 level, we're still higher than we have been most of the last year, but we've come a long way down from where we were, a couple of weeks ago. But this, and given we're, selling things in this class today, can make selling strategies continue to be appealing for some traders. Okay. Just let me reset my chat here. Yeah, I'd Never Eat Here. It's good to see you back. So this is somebody in the chat whose handle is I'd Never Eat Here. And I believe you are a usual suspect as well. You just kind of went MIA there for a while. Okay, so the first one we're going to look at, actually, let's start by doing this. I'm going to switch this gadget and we are going to come up with a scratch pad. And so I have created a couple of example trading plans, and they are under the trade management mini sessions, and I will show you how to access those in a minute. But here's an example trading plan for short verticals. And whether it is a short put vertical, which is bullish to neutral, or a short call vertical, which is bearish to neutral, some of the things that we look for, whichever category they are in, is with respect to the stock, we look for it to trade 1 million shares per day or more. And why do we care about how many shares the stock trades? Well, because if it doesn't trade at least 1 million shares a day, then it's less likely that our second thing, which is that the options will trade at least, that we want high volume on the contracts as well, at least 20 times the number of contracts we're planning to trade, as an example. Okay. And then also with the options, we want the bid-ask spread to be tight. And by tight, what do we mean? Well, we could say we want it to be less than 10%. So, if an option, if one side is $2, we don't want the difference between the bid and the ask to be more than 20 cents. Okay? Because that's what we pay the market maker. And sometimes the bid-ask spread is so wide, as many of us will say, you could drive a truck through it. And then we have to be so right that it's almost hard to overcome what we have to pay the market maker, when that bid-ask spread is too wide. Now, some people may not even have this options volume and stock volume. They may not even look at that specifically. They're just coming and they're saying, hey, if the bid-ask spread looks okay, then I'm going to assume that the rest is all right. But this may be something that we want to just have in there regardless. And then another rule you might put in is that you want your return on your risk to be at least 1% for each day to expiration. And it doesn't mean that you're going to be guaranteed that kind of return. There are no guarantees in trading, as you know, but the idea here is that if you're trying to make it kind of an apples to apples, and if we say we're looking for an expiration date in that 20 to 50 day time frame, well, if you look at something that is 20 days, you might say, well, then I want at least a 20% rate of return, where if I'm going to be in it for twice as long, then I want to get double the return. Otherwise, why wouldn't I just place a trade that expires in 20 days and then place another trade that expires in 20 days? Okay. Okay, now there are some additional things, but this is kind of our basic framework for all short vertical trades. And then there's the, is the trend going in the right direction, depending on if it's a short call vertical or a short put vertical, is it bouncing off a support level or a resistance level, those kinds of things. And let me just show you where to find these in more detail. So if we come here, so we're coming, and this is, my chance to say, like, hey, if you haven't subscribed to the Trader Talks from Schwab coaching channel on YouTube, you'll want to do that. And what comes up first is this, whatever is currently playing or whatever is coming up next. And then when you come to playlists, if you scroll down and you're looking for kind of a turquoisey green thumbnail, when you click on that playlist, and I've been it's been a month since I got going on these. Hopefully next week I can start adding to these shorts. They're under 5 minutes on individual candlestick patterns, because we're going to talk candlesticks today. But here's an example trading plan that we outline for short put verticals. And then here's another one for short call verticals. Now, when we come back here, one of the things that we added is that if we're trying to trade this in kind of a conservative, higher probability way, we also want to avoid trading over earnings. And by that, I mean, you don't want earnings to occur between the time you place the trade and the time it expires, or your intention is to be out prior to expiration. So if expiration is happening in the next couple of days, we're not going to place the trade. Now, like I said, others will use this as an earnings strategy, and they'll have a different trading plan for that. And that's totally legit. So the other question I get asked a lot is, how do you come up with the examples? And today I went to the NASDAQ 100, and because I usually start at the top, with Apple, I often don't get out of the A's before, we've got a whole bunch of examples. So today I just flipped it and we started with Zscaler. And so when we look at Zscaler, and I want this to be interactive, so get your fingers ready to type in. If we were looking at Zscaler, would we be more likely to look at a short put vertical or a bullish trade or a bearish trade? And, if we're playing kind of I Spy with my little eye here, kind of one of our favorite technical analysis games, oops, let me just wipe my slate clean there. If we're looking at this, what are we seeing? Well, some might say, I see kind of a double bottom here, or, an inverted head and shoulders with two shoulders. But what we're seeing is this period of consolidation with a breakout, right? Right. Yeah, so somebody's saying, yeah, this is bullish. And yeah, it is. Now, we do have earnings coming up. When is earnings coming up? Well, to figure that out, all you have to do is hover over that little blue dot on your platform. So, come to mama. Yeah, May 29th. So could we do something out maybe 3 weeks or so? Would there be a strike? Here's the 23rd, so that expires before the 29th. Now, when I look at Zscaler and we say, okay, where would we want to put our where would we want to put our short strike? And our short strike, when we sell a put, it means we're willing to buy the stock. If we're doing this just to make money, we'd want it to be probably below this 216, 217 level, right? So maybe, I think this is $5, so maybe 215. So if I look here, 215, so does this trade more than 1 million shares a day? Check. When I look at this 215 strike, do I have at least, 20 times the number of contracts I'm thinking of trading? Well, we'd probably do 1 or 2 of these. So yes, is the bid-ask spread under 10%? Well, 10% would be 28 cents. It's about 14 cents. So that's about 5%. So we're good to go. So if I come in and look at selling a vertical here, what would we get? Well, on a $5 wide spread, if we're only getting 82 cents, that's probably barely 20%. So I'm going to come down here and we're going to add a calculator. And, we're risking $5. So if we can make 82 cents, it means how much are we risking? We're risking $4.18. That's 19% for a trade we would be in for how long? 22 days. Does that meet our requirements? It doesn't. And you might say, well, it's close. Yeah, it's close. And we've got a lot of buffer here. We have a $15 buffer. But what might we do? We might just be patient, because sometimes when something breaks out, and this hasn't just hit this, this isn't a fragile, what I would call a fragile resistance level. It hit it once, twice, 3 times a lady, 4 times, 5 times before it finally broke out on the 6th time. So is there a chance it might come back to retest? Well, yeah. So maybe we say, hey, if this comes back to 220, maybe we look at this again. It's okay to be patient, even though patience isn't necessarily my strong suit. So with this one, let's put an alert in and say, hey, if this comes below this 221 level, and you can make that number whatever you want. Let's make it 220. It's a little bit closer to where, we'd want to place that strike. So short put vertical trade possibility. This is just a note from us to us. Nobody else sees it. So now we have an alert put in. Okay, so that is Zscaler. So you know what? We didn't get to place a trade, but we made an informed decision based on what? Based on our rules. Okay, and so sometimes the best trade is the trade that we wait to place. Okay, how about we look at team? And again, I was just kind of scrolling through the watch list. So we saw something had a support level here, broke down below, and then, resistance level here. And it looks today like it's breaking out. Well, that's kind of nice. But how many days has this, broken out so far? 1. So are we kind of maybe jumping the gun a bit? And then what about our little blue dot down here? Oh, earnings is today after the market. Well, so maybe we just put this on our watch list and we look at this again tomorrow. Yeah. Okay, so there goes team. Okay, how about we look at PayPal? Oops. Okay, so when we look at PayPal, this is a stock that was kind of trucking along and doing not too badly. And then it hit, in the middle of January, this $93 level, and it started to fall. And, it's kind of tried to catch its breath a couple of times. It kind of consolidated here around the $67 mark. But then was it able to get past that 30-day moving average? Nope. Fell again, rallied, fell again. Now, what we're seeing here is a bit of a pennant pattern. But it came up to this previous high, this 67 level, and it wasn't able to make it above. But we are seeing here a low and then a higher low. but might this, lollygag about for a couple of weeks? Now, if we look at our one, this just came with earnings and it beat on earnings. Okay, well then why didn't it move up? Like, let's come and look at what are the analysts saying about this. Okay, so BMO lowered their price target to 79. RBC lowered their price target. PayPal dropped the price target from 88 to 75. That's a fairly big drop. We have one, Baird, which is raising, but it's like, and Jefferies is raising their price target. So it's really a pretty mixed bag. We've got Goldman Sachs cutting, Morgan cutting. We've got some raising. And these are people, this is their job to get this stuff. And they're not quite sure of what to do with it. So, could we, look at this and say, well, I'm bullish, or look at the fact that it came up here, it hit this resistance level, after this being a support level for weeks, it's hit it once and now twice, and it's having trouble kind of getting back above. And the analysts are a mixed bag. And what does PayPal do? Well, they process payments. And have we seen a lot of conversation around demand destruction? Meaning, in English, for us normal people, people are buying less. And might that have a negative impact on PayPal? Well, I guess it could, couldn't it? And so could we just come out a couple of weeks and say, you know what? I am going to sell the 67 and then buy the 68 or the 69. So if we come out to our trade tab and we look at PayPal, and let's say we come out, if we're looking 20 to 50 days, maybe we stay closer to the 20-day range and say, if we look at this, May 23rd, again, does it trade a million shares a day? Check. Here's our little list. If we look at a short call vertical on, 20 some days out, we look at this 67, do we have a tight bid-ask spread? Well, we want it to be less than 16 cents and it's 6 cents, so check. Do we have 20 times the number of contracts we're planning on trading? Check. So the next question is the juice worth the squeeze? So if we come to our vertical, will we get 43 cents seriously on a dollar-wide strike? That's pretty huge. What do I mean by that? Well, we can make 43 and we're risking how much? 57 or 56. So that's a potential 75% return on risk, which is very high for a short vertical if you're looking to go, above a support level. So you might say, well, why wouldn't we consider going out 2 strikes then? Well, we could. Now we're doubling our risk. Let's see if we double the credit we get if we go from 68 to 69. We don't. It's like it would have to be 86. So we're 10 cents less or $10 a contract less. Okay, but what about the transaction fees? Well, if we do if we do 2 trades instead of 1, how much more do we pay? Well, we pay 65 cents per leg per contract. So $1.30 more to get in and $1.30 more to get out. So that's $2.60, but we're getting paid $10 more per contract. So it seems to me to be a better deal to do the shorter width, like to do 67 and 68. And that's the rationale behind it. Now, what else should we take into consideration? Well, the probability of it going through both strikes is higher if you go with the shorter, the narrower strike width, because you've got a 34% chance of it being in the money at expiration at the $68 strike and a 27% chance at the 69 strike. So we're going to go with the 67 and the 68. And so we're risking 50 cents a contract. And if we said, like, we're willing to risk $500 on a trade, how many of these could we do? Well, we could do 9 of them. So we're going to do 9. And then I usually put in an exit, and for some reason, this isn't working. I've got to get with my technical wizard. Her name is Bree after this and figure out why I'm struggling with that since I recalibrated some things. But we're going to go ahead and put this in. And then what we'll do is once it's filled, we'll go in and I'll demonstrate how to put in an exit. So we're going to come to our short call verticals. So we're bearish on this. Okay. So we put that trade in and we'll just wait for it to fill. And if we sort by time placed, again. So we're just kind of waiting for this to fill. And sometimes we just have to give it a minute. So while we're waiting for that, let me just look at the questions. Is there a specific script for the volume study? This volume study appearing down here is just the default. It's and I have the bars showing up red or green based on appearance. So if you come here to appearance and you can see here your volume bars, it says color the same as your symbols. Or you could say just make them all blue. I want them to show up the same color as the candles. I also use candle trend. And the reason I use candle trend is because when something like this gaps up and then pulls back, I want it to show still that it was a bullish day, not like if this was if a candle, this would show up as red. And that just kind of drives me crazy, but it's personal preference. You can do it however you like. So that's why sometimes my chart might look different than your chart. Okay, so that was PayPal, and we've looked at Team, and I think we looked at Qualcomm. Let's look at UPS. Okay, so with UPS, like here's a stock that, it's down 24% year to date. And this is a 9-month chart, but we can see here's the 200-day moving average, this black line, and it's only twice made it above that line. And for a very brief period of time, it's like me trying to do a pull-up. Well, I wouldn't even get that far above the bar, I can tell you that. But, it's been struggling, right? Like this has been downtrending. I don't think anybody's going to argue that point. So we'd be looking at a short call vertical, right? Right. We're on the other side of earnings. And, but what we've seen is it's kind of trying to consolidate, right? But it's having trouble breaking above this 99-ish level. And I mean, support and resistance are not finite numbers, but what we saw is this broke below and then it keeps trying to get back above this level. And so far, no cigar. And then we had earnings. And earnings, that number was $1.49. Well, let's just hover over that and see what they were expecting it to be. But, when I look at the chart, it doesn't seem like, there was a lot of, excitement about that earnings announcement because it didn't seem to change the trend much, right? So they did slightly beat on earnings. But if we come here, are analysts raising price targets or lowering them? Well, here's Jefferies went from 150 to 130, 133 to 126, 115 to 110. Like here's one, Bernstein raised it by $1. Everybody else seems to be lowering their price target, 130 to 125, 110 to 101. Like that's, what, a 9 or 10% drop. These guys lowered their price target to 125. So overall, except for that one exception, and here's Daywa, they went from 120 to 103. That's a big drop. Okay. So if we look at this, and what's one of the disadvantages here is that, like, it would have been ideal had we placed this, maybe yesterday before it fell. That would have been more advantageous. Why? Because it's closer. And so we may not be able to get the premium. And then today we have this candle pattern happening that may indicate that this current 1, 2, 3, 4, 5-day pullback may be drawing to a close. So we might be better to wait and see if it bounces and comes back up to this $99 level. It's almost $5 below it. And so let's come out to May 23rd. We're on the other side of earnings and look at this $99 level. Now, does it trade more than 1 million shares a day? Check. Do we have 20 times the number of contracts? Check. Tight bid-ask spread? Check. But if it's under $1, the odds of us getting enough premium, not so hot. Well, 24 cents. Now, with the last one, we were hoping, the intention was to get 40, but this is still a 33% return on risk. Because we're risking 24 we're risking 75 or 76. 24 divided by 76. That's still 32% for a trade we'd be in for 22 days. So if we say, okay, we're risking $75, like how many of these could we do? So let's say we did 7. We're risking 550. So let's say, okay, we'll do 6. If we did 6, and we've got at 99, we've got $4.25 worth of wiggle room. So if we're saying, we're okay with that. So we're going to hit confirm and send. We're risking $438. The most we can make is $162. And short verticals by definition tend to be a base hit strategy. Okay, short call verticals. Now let's come back and look at, so here's our UPS, which means the other one got filled. So we sold this on PayPal. So we're going to come down to our short call vertical group. Let me just see where it is right here. So here's our short call vertical group, and we're going to look at PayPal, which we just placed that trade on. Ooh, we've made $27. Woohoo. And keep in mind, what the market giveth, the market can taketh away. So now we're going to put in an order to buy it back. And we want to buy it back when it's worth about 8 cents. And so we could be out golfing or, walking the dog or doing whatever. And especially first thing in the morning, sometimes there can be some volatility in the market. Sometimes something will hit our target and get us out of the trade, and by the time we look at it, the market may have settled, back down, and we've missed our chance to get out. So the transaction fee, because we're doing 9 contracts, it's saying here, our max profit. Oh, yeah, this is off because I'm putting in this closing trade. We'll look at that on the next one. And normally we don't do such close strikes. So we looked at PayPal and we've looked at UPS. Let's look at Etsy. Now, Etsy is one of those ones that we talked about yesterday. And when we think about Etsy again, what does Etsy sell? Like a lot of customized, boutique-y, handcrafted items that many would consider to be consumer discretionary type items. Like they're things that you'd like to have, but it's not like buying eggs or a loaf of bread, things that you need to have. And so, might this explain some of why, this stock has been falling if demand destruction turns out to really be a thing? And if we look at this, we went from earnings of $1.03 a share with the last earnings announcement. We're here, they were expecting it to be a profit of $49 a share, turned out to be a loss of 49 cents a share. So, what is the news on this? Well, maintaining a neutral, maintaining an underweight, lowering price target to 31. Ouch. I mean, it's sitting at 43, lowering price target to 38. Cantor Fitzgerald, there's always one, or two anomalies, right? They're raising their price target. Wells Fargo lowering, UBS lowering, Riley lowering. Like, do you see a trend here? So, they're saying they're maintaining it as a buy, but they're still lowering their price target. And so, could this continue to fall? And, so could we sell something up here, maybe around this 46 level or 47 level? And so let's come out and look at, if we came out 3 weeks to say this 46 level, or if we came out 4 to 29 days to this 46 level, again, and we see today, on the 23 weeks out, we had 98 contracts exchange hands today. Are we over a million? Yes. Do we have 20 times the number of contracts we want to trade? Probably. So if we did say 46 and 48, we have a 27% probability of this expiring in the money currently. And so again, this is 27. If we went to 48, would we get 50? We're only getting 47. We're doubling it would be 54. But again, you're going to have, higher transaction fees. But are those transaction fees per contract going to be higher than $10? No, they're going to be, $260, like we discussed, per contract higher. So again, we just did the math on something similar. So, if we can make 27 in 23 days and we're risking 73, that's still a 36% return, which is above that 22. And, we're on the other side of earnings. And so if we looked at that and we said, okay, if we do our 6 contracts, how much are we risking? We're risking $438, which is less than 500. So we're okay with that. And we'll put this in our short call vertical group. And then if our example exit is at an 80% gain, we'd buy it back when it's worth about 5 cents. Okay. Okay. So that's Etsy. Now, how about we look at Dow? This is another one. We talked about it yesterday. So when we look at Dow, like here's another stock, and there's unfortunately been no shortage of them that has been on the struggle bus, and this one since really the beginning of October. It's just been going down, down, down. Well, one of the challenges is that, now they were expecting it to be down about 1 to 2 cents a share. It actually was down 44 cents a share. And it's, come down and was kind of trying to rally, but it seems to be struggling to get above this 31 level. And so some might say, well, I want to wait for confirmation. My rule is if I see this type of candle pattern, and if you watch that short vertical on these hanging mans, confirmation occurs when it closes below the body of today's candle. So we might just look at this one again tomorrow and save that one for tomorrow. And you know, I teach trading a smaller account on Fridays at high noon. And so, you know, now if we place this trade today, could we do that? We could, but it's a more aggressive entry. You know, and you might say, well, I'd be okay with placing this today because, you know, it's bumping up against the 30-day moving average. When I look at, you know, this longer time frame, it doesn't seem to have had much success in getting above it for any extended period of time. And I could appreciate that analysis. But if you're trying to do this in a more conservative way, you might say, yeah, be that as it may, I'm just going to wait for confirmation that it isn't going above that 30-day moving average, and then I'll place my trade. That whole patience thing can be so annoying, but it can save you so much money, right? Right. Okay. So we've had just those 2 orders fill, so we're still looking for UPS. And now they're saying it's only trading at 24. So we're just going to come back here and adjust our trade to see if we can get that filled. And we'll put that in our short call vertical group. Okay. So I appreciate you hanging out with me today. No, we are not going to do an earnings trade today, but I think that James Boyd talked about trading short put verticals over earnings in trading the trend. And so, and that was just the class before this. So it won't have hit the archives yet, but if you didn't see that class, you might want to go and watch it because that was one of his topics, you know, for that class today. And he does a great job of explaining things. So we are not going to do an example over earnings. This example trading plan says avoid trading over earnings. Okay. And so, you know, you may want to listen to see what his example trading plan is over earnings. Okay. So as we wrap things up, I encourage you to subscribe to the channel if you haven't done that already, to hit the like button because it helps move this up in the algorithm so that more people can find this content on YouTube. And then follow Brent and I in the land of X, Brent Moore CS and Barb Armstrong CS. We're posting a lot of content there that we hope you will find informative and engaging. And somebody asked, you know, what example trades we did place today. So if we come to our monitor tab, and I've sorted these by date, you can see that we're still waiting for this fill on Etsy. So let's just see if I can get us this one to fill. We'll take a penny less and put that in. So we're still waiting for Etsy to fill. There we go. And so we did 3. We did one on Etsy, one on PayPal, and one on UPS. And then to add our exits, we want to get out at 80% of our max gain. And that isn't saying we have to wait until that long, but we'd say, okay, you know, when this is worth about a nickel, you know, spend the nickel to avoid the pickle, as Ben Watson would say. So we're going to put that in. So you can see how quickly we can do that if you think like, oh, I didn't put an exit in when I placed the trade. And this was, so we're going to make this one 5 cents too. So we did those 3 example trades today. So I hope you found those helpful. I want to thank the people behind the scenes for helping bring this class to life. And then of course to Brent Moores for doing such a great job of assisting in the chat. So guys, have an awesome rest of your day. I am teaching after the close at 4 o'clock Eastern today. So feel free to come back for that. And I forget what is up next. Let me see if I can. I don't have that up, unfortunately. Oh, Kevin Horner, getting started with stock investing is what is up next. So Kevin is a great coach and a great instructor, you'll want to stick around for that. And then if you're not, like, your head isn't ready to explode, join me for after the close. Take care, everyone. Bye for now.